This is a candlestick, and depending on its shape, it tells us the story of how the market will behave next. But what if I told you that everything you know about candlesticks so far is just one big lie? Yep, I really just said that. Hammer candles, dojis, engulfing candles, they don't work at all if you don't pay attention to certain things. Most retail traders look at a chart like this and trade based on it. They see a hammer candle and would go long. But that's not how the game works. But what if I told you now that certain candlesticks can actually predict the next move for you, if you do it right? Every candle you see is one of these three types: an indecision candle, a control shift candle, or a strength candle. Let's start right away with the strongest candle. These candles have a large candle body, but only a small wick. Here, buyers and sellers are in complete agreement. That's really bullish. But even this candle can definitely be much stronger. If we see a powerful candle with a large body and no wick, then the buyers are absolutely in control here. That's absolutely bullish. Of course, the same applies the other way around. If we have a selling candle with a big body but no lower wick, that's absolutely bearish, because that means there was absolutely no buying volume coming in, only selling volume, and in that case, the bears are absolutely winning. But there are a lot of strong candles in the market, and you have to focus on the big candles, because even candle number 4 is a strong candle, but you can clearly see that the body is by far not as big. The bigger the candle, the more aggressively it was bought. The smaller the candle, the weaker the bulls were here. But what if no one is controlling this? Then we come to the second candle. This candle shows us that it lost the battle. This is also called a control shift or reversal candle. With these candles, we have a large wick, which actually means the buyers were very strong. But then, conversely, we see that the sellers won and turned the whole thing around again. With this candle, it actually doesn't really matter how big the candle body is, or whether it's green or red. The wick is crucial, as well as the candles before it, because often a reversal candle can indicate exactly when the trend is reversing. Of course, the same applies the other way around. If the price is rising and we then see a short control candle, that would rather suggest that the trend is reversing and will fall again. But very often, we also have a candle that looks like this, and that brings us to the third candle formation. This candle basically tells us that no one can control it. The indecision candle looks exactly like this: a small body, but two large wicks. With this candle, we see increased demand from both sides, but they can't agree. They can look like this, like this, like this, or like this. All of them are indecision candles. People also often call these candles dojis. We always see such candles before a big breakout or a major drop, because that's exactly where the market wants to position itself in one direction. We should never trade these kinds of candles, because this candle simply doesn't tell us who is in control here, the bulls or the bears. But an indecision candle combined with the next candle already changes quite a bit. Here's an example. If we have an indecision candle and right after that a control shift candle, that changes everything, because that means the buyers, in other words the bulls, have won. You could open a long position right away, or you could wait for a pullback until we come back into this zone, and from there you could also go long. It's the same if we have an indecision candle and immediately after that a strong candle. In the end, that also means that the bulls are setting the direction here, that the market has made up its mind and has to go up. But everything starts with the indecision candle, because it already gave us the signal in advance that the selling volume in this example is decreasing. But what isn't decreasing is your support. And with that, thank you so much. Please feel free to leave a like and a comment again today. We are planning to make even more elaborate and better videos in the future. We can only do that with your support. Thank you very much. So now let's take everything we've learned and put it on the chart and move on to the live examples. Take a look at this chart. We're in a downtrend, but right then we have 3 indecision candles. And that means the market is no longer in agreement. The bulls are fighting the bears right here. But what we see is that the first candle has a huge wick. And this wick shows us that actually the bears pushed the price down, but at that moment the bulls came back and we saw real buying pressure, which is a very positive sign. After these 3 indecision candles, we now even see a strong candle, which basically indicates that we will continue to rise because a lot of buying volume has come in here. And exactly what we expected happened. And what is also important to note now, it took 22 candles for us to reach the low price, but only 4 bullish candles to make up for it again. Because that reinforces the assumption that we are seeing further buy pressure here. And that's exactly what happened. This breakout area down here I would now describe as a demand zone. And we should also mark this area, because from that point on we saw an extreme amount of buy pressure coming in. We would mark this zone by taking the lowest wick of this buy candle up to the high of this candle, because this zone could become interesting again later. Now the price has risen higher until we reach this candle, a red control candle, and this is exactly the same as before, only this time in reverse. The buyers drove the price higher, then the sellers came in and pushed the price down, which ultimately means the sellers have taken control here and will now continue to push the price down. And right after that, we saw a red strange candle, which ultimately reinforces that the sellers are confident in the direction and will continue to push the price down. Now that we've corrected further down, we can mark the upper zone as a supply zone. So, in the end, that's the area where the sellers took control, and it's always worthwhile to mark such zones. At that point, the price went even lower, and this chart already tells us quite a bit, because first, take a look at this uptrend. In the uptrend, we clearly saw that the buyers were really strong. There were noticeably fewer candles used here because the uptrend was just extremely strong. But the downtrend is definitely slower than the uptrend. This basically means that the buyer's demand is still relatively strong here as well. And another fact is that we've now tested our demand zone, and we did so with a strong candle. Because here again we can see that the sellers tried to push the price down, but the bulls pushed the price back up, and accordingly the buying volume was really active again in the same zone. And the next candle is even a strong candle, which are further signs that we are likely to rise higher, that the buyers have taken control here. At this point, we ourselves want to open a long position. We do this by placing our entry at the lowest point of the strong candle, and that's exactly where the price ended up going. We set our take profit at the supply zone and our stop loss at the demand zone, where we recently saw aggressive buy volume coming in. And at this point, we can clearly see that we've identified the zones where buyers have entered and where sellers have entered. So this is no longer just wild guessing. Everything is now based on a solid, meaningful foundation. And this setup worked out as well. And what I want to emphasize to you here again is, don't just look at a single candle. Don't just go long when you see a single strong candle, because in the long run, that won't make you any money. Look for multiple correlations. Only if you do that can you clearly see where buying strength is coming in and where selling volume is appearing. If you do that, if you have multiple correlations, then you can also trade with candlesticks and be successful with it. To identify candles here, you can also use an indicator. On TradingView, go to Indicators, type in Candlestick, and select the first one from Repo 32. Now you can see here all the candlestick patterns that exist are displayed. At this point, I just have to say, as I already told you, most of them don't make sense or are a bit unimportant. But with the indicator, you can turn on or off any patterns you want or don't want. And with that, you can definitely identify certain zones. For example, here, you could identify an uptrend because we've already seen a massive inflow of buying volume here. The indicator definitely helps a bit more here as well. What also makes perfect sense here is to combine these candlesticks with your own trading strategy. If you're already planning to go long according to your strategy, and then you see these kinds of candles where sellers tried to push the price down, but buyers came back even stronger, then it makes even more sense to go long with your own trading strategy. And that's why it's very important to be familiar with things like this, because knowledge is power. Any additional trading knowledge helps you, no matter what strategy you use. And what will also help you in the future is subscribing to the channel, because we will be publishing many more very exciting trading strategies here that are absolutely profitable and very interesting. This video was an enormous amount of work today. I actually filmed this over 5 or 6 days, and I would really appreciate it if you could give something back by liking, commenting, or subscribing. Also, feel free to write in the comments which strategy you would like to see next.